Welcome to the Compass series of conversations with leaders charting the course in impact investing. I'm Ben Thornley, and thank you for joining us. Today, we're excited to host our first regional spotlight focused on East and Southeast Asia, which account for about 7% of impact investment assets globally. Notably, this is up from 1.5% just 3 years ago, according to the Global Impact Investing Network. So this is a group of diverse countries and markets experiencing tremendous growth. That said, the region is still relatively early in its impact investing journey, with challenges and opportunities for additional formality that we will be discussing today. One question I will be asking is what those of us outside the region can do to be more supportive. Tideline, for one, is committed to continuing to provide advice, knowledge, and training in Asia, and we will be back in Singapore in May, hosting a masterclass that we will share more information about at the end of this webinar. But there's no question Asia can lead the world in impact investing. With shared prosperity as a top priority in countries exposed to the effects of climate change more than many others, the region will be a crucible for business-driven solutions. To all of you tuning in, please feel free to use the Q&A function in Zoom to submit any questions. We will have a chance to share those with panelists in the second half of our conversation. It's my great pleasure now to welcome our guests for today's Compass series. Michael Lau is the founder of District Capital, a private investment firm focused on people and planet positive impact, and board chair of Tonic, a global community of impact investors. Michael's based in Hong Kong and has been active developing the impact finance ecosystem, supporting capacity building, teaching, and advocacy. Welcome, Michael. Dawn Chan is Managing Director of Investments at Temasek Trust Capital and the CEO of the Centre for Impact Investing and Practices in Singapore. Dawn has over 20 years of investment experience in private equity, venture, and fund of funds investing across Asia, the US, and Europe. Prior to joining Temasek Trust, Dawn helmed the consumer unit at Temasek International. Thanks, Dawn. Eliza Fu is Director Impact Investing at Temasek, where she joined the organization in 2018. Eliza has worked in private equity and investment banking for many years, including prior to Temasek at Carlyle, Asia Partners, Merrill Lynch, and Goldman Sachs. Eliza has been involved in various impact and sustainability working groups, including the G7 Impact Task Force Working Group, the Monetary Authority of Singapore Green Finance Working Group, Bluemark's Allocator Working Group, and GIIN's Impact Lab Advisory Board. Thank you for joining us, Eliza. Katsuji Amata is the chair of the Data and Indicator Working Group of the newly formed Impact Consortium in Japan, a public-private partnership to promote the impact economy. He is also vice chair and the training committee chair of the Japan Evaluation Society, an accredited trainer for the SDG Impact Standards, and a member of B-Lab's Regional Standards Advisory Group focused on Asia. Thank you for joining us. Valerie Lau is the head of Global Sustainability and Impact, Group Sustainability Impact for the APAC region at UBS, where she is responsible for driving sustainable finance and social impact and philanthropy initiatives across the firm in Asia. She sits on the executive committee of the Singapore Sustainable Finance Association, where she also co-leads the Natural Capital and Biodiversity workstream. She also represents UBS on the Sustainability Forum of the Private Banking Industry Group and on the advisory board of the Singapore Green Finance Centre. Valerie, thank you for joining us, and thanks to all of you for contributing your leadership and invaluable insights to today's Compass series. Eliza, I would like to start with you. Temasek's been active as an impact investor in Asia for 5 years. It would be great to hear more about that initiative, and stepping back, how would you characterize the state of development of the impact investing market in Asia?
Thanks, Ben, for having me today. So let me first briefly share what we do. So Temasek is a global investment company with portfolio value of US $288 billion. We are a generational investor, and sustainability is at the core of everything we do. And impact investing is one of the key initiatives under sustainability. So our impact investing team was set up in 2020 with the aim to mainstream impact by investing in experienced impact GPs and highly impactful companies, as well as to contribute to the ecosystem through thought leadership and capabilities building. So in deploying this capital, we look not only to achieve market financial returns, that is the same as the rest of Temasek, but to create positive impact for people and planet so that every generation prospers. So given our focus on impact for communities and the underserved population, the key sectors that we look at include financial services, healthcare, and climate in emerging markets in Asia, Africa, LATAM. So back to the question. So I believe overall, the impact investing in Asia is really rapidly evolving and still very dynamic, with significant potential for growth. We are, in fact, the most active in Asia, especially in India. We've also mentioned kind of globally, the industry has grown to US 1.5 to 1.7 trillion. And this is really driven by large institutional investors. So for example, pension funds now account 20% of total, vis-a-vis only 3% in 2019. PE remains the main dominant asset class. However, EM only accounts 30% of the total. This is also driven by different stakeholders. We see the millennials in terms of the transfer of wealth to the next generation who wants to do more. Consumers looking for more sustainable and impactful products. And there's also evolving kind of global standards and regulations to ensure integrity and authenticity. So some of these global drivers are also driving the growth in Asia. However, in Asia, this number is smaller, as you mentioned, the 80 billion, 5 to 7% of total, and mainly driven from South Asia. If you look at the macro environment, obviously, you know, with the recent completion of the elections in the US, ongoing war in Europe, political tension in China, investors are asking where else to deploy capital. And we do see a number deploying more in Asia, especially in India, and to some extent, Southeast Asia. So I think that's very, very interesting. We're also seeing a number of family offices being set up in Singapore. I'm sure Valerie will talk about it later. And they're very keen to learn more about impact, but it's still early days. However, that said, there are still challenges in impact in Asia, ranging from availability of deals. In Asia, the ticket sizes tend to be still quite small, to gaps in impact management and measurement, especially on capabilities. And of course, the focus on exits. We need more in Asia. The environment has been hard over the past few years, and we can't ignore what's happening in the US. So unfortunately, I think the momentum will be affected a little. So we all have to do our part to allocate more capital in impact.
Right. Well, thank you, Eliza. I think that's a great overview. And Michael, turning to you, and Eliza had mentioned the importance of wealth holders in Asia, the generational transfer of wealth, millennials. You know, District Capital is itself a prominent family office in Asia, and as chair of Tonic, a global organization, you have a unique vantage point. So, a related question. What do you see in Asia that's been similar to the way impact investing markets have developed outside of the region, and what's been unique in the way impact investing has developed in Asia?
Thank you, Ben. Apologies, I'm recovering from a cough, so my voice might be soft at times. I think, first of all, I'm going to answer this question from the perspective and context of Tonic. Asian members consist of about 10% of our global membership. I think that echoes, what you observed about our region representing 7% of global funding in impact investing. Our members represent family offices, foundations, and many next-gen family members looking to prepare themselves for wealth transition. Many of our new members tell us that there are little room to discuss these ideas in their local contexts as of now. I think, yes, compared to more developed markets, adoption of impact investing practices in Asia are generally in nascency and has a lot of potential to grow. I think that there's a lot of work that leaders in this room can do in order to prepare to shift more mindsets into the wealth stewardship here and of impact investing. Asian cultures generally have a deep tradition in charitable giving, and I think that plays to our advantage. That many wealth holders, they can for me myself, I found that many family and personal foundations appear much more often as co-funders in my impact deals here than, say, if I participate deals elsewhere in the world. I think that this indicates that for managers and professionals looking to come into Asia for funding and looking for co-investors, they have to understand the constraints and goals of these foundations. and which can help unlock many more possibilities and success for them.
Got it. Well, thank you, Michael. Appreciate that. And Dawn, at the Center for Impact Investing and Practices, you're playing an important role as a convener, a thought leader, an educator in the Asia market. What are you seeing as some of the gaps that Michael and Eliza have alluded to that you think most need to be filled? And where is SIP now focusing your energies as a result?
Well, I think, first of all, thanks for having me. A pleasure to be here. So in the GIIN 2024 survey, I think they focused on Asia. And there you do see in that survey also a clear mention of the gaps, right? So a need for investors with the relevant skill sets, a need for measurements and understanding of what to measure and what to put in place to collect the data. And also increasing sophistication. And this is where you see pension funds and DFIs, where they are using those particular impact measurements to start evaluating where and when to deploy. The other thing that is also unique for Asia is that you see most of the deals are still in the growth and the mature stage. This means that there is an absolute gap in the early stage funding. So when it comes to SIP and what we're doing, so there are 3 areas that we're really focused on. One is capacity building. This is in partnership with GIIN, also with Tideline and other organizations. In particular, we're working with GIIN to create a course for companies really who are looking to implement impact practices, right? What do they need to do? So this is really getting to where that capability gap actually exists, especially in Asia. The other thing we do is research. We do this in terms of proprietary data, white papers, case studies, really trying to showcase how companies can adopt impact strategies and put those into practice, right? This research work also addresses a sort of baseline data. Where are the benchmarks? So then investors can decide, okay, any investment opportunities kind of have to exceed what is already available. Again, the concept of additionality that is so core to the idea of impact, right? But lastly, in terms of that gap in the early stage, and this is where, to pick up with Michael, this is where we really talk about the spectrum of capital, and you need the right kind of capital for the right stage of company. And this, together with funding from philanthropic partners and really support from a lot of industry players, including UBS and Valerie on this call, this is where we're actively supporting the startup community through 2 programs. One is the Amplifier program, and the other with our work with UNDP SDG Scaler. And in particular for the Amplifier program, there we depend on funding from members of the Philanthropic Asia Alliance. And there we're actively sort of supporting startups through a 12-month program, really to build up that, hopefully that pipeline of deals that then can be invested in by the more growth-focused investors that are looking at this region. So that's what we're doing.
Got it. Well, thank you, Dawn. And Valerie, I'll come to you in a second and would like to follow up on some of what Dawn has shared. But first, turning to Japan and Kitsuji, in Japan, the market does appear to have developed with perhaps a greater level of formality. Can you update us on the impact investing market's growth in Japan? We've read about the new platform you're involved with called the Impact Consortium, established with the leadership of the Financial Services Authority and the Ministry of Economy, Trade and Industry in Japan. What is that and what will it accomplish? We'd love to hear more.
Well, first of all, thanks, Ben, for the introduction, and great to be here with you all, the panelists today. Maybe I'd like to take a step back and then mention a few coalitions that led up to the kind of a burst of new different initiatives around impact in Japan today. I think maybe I should mention in 2013, of course, the GSG was founded. At that time, National Advisory Board was formed in Japan as well. That really took on some of the leadership role for the impact economy to blossom. And then my coalition, Social Impact and Management Initiative, was founded in 2016 to really promote the practice of a social impact management across different sectors. One of the watershed moments, I think, came in 2020 when GSG Japan and the FSA Financial Services Agency got together and started this informal roundtable on impact investing. Because it was informal, it was easy for different financial institutions to join and study what this impact investing is all about. That may have something to do with the formation of the new vehicle called the Impact-Driven Financing Initiative in 2021. So it's been 4 years, and Simi and myself have been part of it too. And then we have seen the growth of the coalition. Now we have more than 80, well, close to 80 or more than 80 financial institutions as signatories, which really varies from big financial institutions, banks, and financial insurance companies to much smaller, like venture capitalist firms and others. So it's really a great momentum we see there. And then also on the startup side in 2023, METI, Ministry of Economy, Trade and Industry, started this initiative called Impact Startups. So the impact is there also on the startup side as well. And then I can also share this, but FSA last year produced this basic guidelines for impact investing. And then, also this impact consortium was also formed last year. FSA and the METI really took the leadership from the government side, but it's really a private-public partnership, and then not just financial institutions, but companies and federation of companies like Tideline did also join to really form this coalition too. So it's really become a broader movement in Japan.
Got it. And Katsuji, what are the aims of the consortium?
Well, really to really promote this idea of putting impact at the center of economic activities and economic growth. So since it's a broad coalition, there are many different interests, but there are right now 4 working groups, one of which I do serve as a chair, which is a data and indicator working group. So that's one of the key interest of the consortium, as well as the market growth. And the regional revitalization, of course, is a big issue in the super aging economy and society in Japan. Also, matchmaking between the investors and enterprises and companies. Those are the 4 working groups that we have.
Got it. Well, it sounds like an exciting initiative. We'll come back to that. Valerie, turning to you, UBS also has such a critical vantage point as the largest private bank in Asia. I mean, what types of investors are asking about impact, and what are the messages about impact investing that are resonating in Asia in your experience?
Yeah, thanks very much, Ben, and so honored to be here with these leaders in the room. Well, definitely for UBS, I'm actually from the Group Sustainability and Impact organization, and we work together with the different business divisions in wealth management that are active in this space with our investors. So overall, we're seeing a lot of interest, I think, in impact investing across a broad spectrum. And I think the numbers that you mentioned 7%, which I think demonstrates to us there's still a huge potential. And due to this interest, we then, I think, recently conducted a business families study, which assessed over 20 families in Hong Kong and Singapore. I think some of the names will be very familiar to those of us in this call as well. And we were talking to them about their sustainable and impact investing preferences, experience, what were some of the support needs, and maybe just to share sort of 3 findings, I think, that we came across. And this assessment, I think, not only showed Asian families a strong interest in sustainable and impact investing, but it also uncovered that families are willing to follow pathways to incorporate this both in their investment as well as in their business operating models. I think this really reflects the stage of development of businesses in the region. There is no single pathway that we're seeing, but the interest is very closely tied to their business operations and also the philanthropic practices, I think, that Michael alluded to, has been sort of like a fundamental pillar for how these businesses and families have looked at, impact investing. So I think the first finding we're also hearing is that the next gen investors are showing a lot of interest to add, in addition to the financial returns, additionality and intentionality about their investments. They're interested in investor impact. They're interested in driving intentionality, and also the practice of impact measurement is something that I think they welcome, though it might be still early stage in terms of the adoption. I think in terms of a second main finding, we're finding that some of the pioneers in the market are becoming more receptive to pooling capital, investing in fund structures to try to achieve economies of scale in impact management and measurement, and more efficient portfolio management. Some investors are beginning to look at both the investing and the philanthropic allocations to sort of adopt a total portfolio approach. And we find that to be more active among the pioneers. I think geography matters quite a bit. We also hear when we speak to the families that they care about local issues and outcomes in their communities. So here's where they may deviate from that portfolio approach, but they're driven, I think, by what they actually see and care about in the local communities. And I think the third finding that I wanted to share was a very strong alignment, and the centralized decision making around operating businesses would mean that these businesses are not making their decisions in isolation. They're very much concerned about what is happening in their business. I think, Ben, you also mentioned that this part of the world, there is a lot of opportunity for businesses and the way that they've made their wealth to think about, the impact on the environment. So we see that alignment, and so a shipping business family may be inclined to find solutions that are targeting environmental and social impact, or textile business will be more open to, looking at perhaps textile waste or sort of sustainable synthetic materials. So it's an integrated approach, I think, that they're taking here. I'm going to stop here for these observations to share.
Well, thank you, Valerie, and we'll come back to that. And Eliza, actually, is the next question for you. I'd love to hear a little bit more about the pipeline of institutional investment opportunities that you've seen at Temasek, how that's evolved in recent years, and what you'd like to see more of. But just as a follow-up question related to Valerie's comments as well, is Temasek operating in a completely different sphere to the families and wealth owners we've just been discussing, Eliza, or are you seeing opportunities for connectivity between the work you do and the work that families are doing as well? So I know that was a bunch of questions, but yeah, appreciate your insights.
Yeah, no, I think it's very exciting to hear the momentum from the other panelists as well. And I think I always say impact is very unique because everyone is very collaborative. We're very focused in terms of solving the problems. So we do work very closely across the spectrum. So whether family offices, philanthropies, DFIs, institutions, whether from a deal-making perspective, collaboration on thought leadership, I've not seen this type of engagement in your typical private equity. And I think we're seeing more in Asia. So that's quite exciting. Yeah. Maybe then zooming to your question, or yeah. So in terms of, I think you highlighted earlier, we are our 5th year of our impact investing journey. So this is actually quite a key milestone for us. And maybe I can share what we did in the beginning. So we did spend quite a bit of time mapping out what were the key problem statements in EM we wanted to tackle, especially focus on the underserved. So from an investment perspective, we then mapped out what were investable across sectors and subsectors. So with a global lens, we then identified what were the right business models, and of course, the key parameters for successful investment, from alignment of founders to, of course, returns, and ultimately on the impact side, what are the right KPIs for impact outputs and outcomes. In terms of where we are today, we've built a diversified portfolio of leading impact funds and impactful companies across different sectors and geographies. We have held the bar high, I think, from an impact and returns perspective. And it's still early days, but we're very excited in terms of the potential of the portfolio, especially in terms of the impact it's generating and will generate. That said, I'll say execution is key. So post-investment, we are still spending a lot of time working with our investees, whether value add from strategy, value creation, and on impact. So pipeline has evolved and grown in Asia due to these factors. I think one, scale. There are large addressable market targeting rural, tier 2, tier 3 MSMEs. So for example, the population in Asia will grow to 5 billion by 2050. And this is going to be 50% of the global population. So you cannot ignore Asia. Two, innovation. So successfully leveraging, whether data, technology, digitization helps to optimize in terms of efficiency and unit economics. And this is leading to very interesting business models. And lastly, enabling government policies. I think kind of India's DPI, which is the digital public infrastructure, has been attracting worldwide attention, especially with the successful implementation of the payment system, the UPI. This has allowed more successful outreach in terms of the underserved. So in the future, I do hope to see more scalable, investable opportunities focused for the underserved in EM, especially in Asia, but hopefully with more eventual exits. What's key, I think some of the factors I mentioned earlier will also drive kind of pipeline opportunities in Asia. But what's key is to be able to see what are the success factors, for example, in India, to try to replicate it to countries like Southeast Asia. And lastly, you would hear, I think investors are focused on DPI and exits. So maybe investors have to be more flexible and innovative in terms of the structures, and maybe more kind of building up the secondaries market for liquidity.
Thank you, Eliza. There was a lot in what you've just said, and I'd love to come back to some of those as we get to the questions, but really invaluable input. Thank you. Dawn, staying with the theme of the investable product set and zeroing in on the part of the market focused on perhaps more new and innovative types of opportunities, what have you seen at SIP and Temasek Trust in the catalytic capital and blended finance space? And are you seeing the kind of progress in the type of data, connectivity, the kind of policies, the sorts of levers that Eliza alluded to that you would like to see to generate progress in blended capital and catalytic capital?
First, I'd like to pick up on something that Eliza said, right? So the impact opportunity set in Asia is actually large. And you can see that from the work on UNDP. This is sometimes not new technology. You do not need rocket science here. There is market demand and need for healthcare across the entire spectrum. And for smallholder farmers, it is not new tech that's needed, is just scaling and execution. So really for the catalytic capital, what we are seeing is that more investors, and maybe sometimes it's family offices and philanthropists stepping up. Sometimes it's also companies and CSR stepping up because they realize which pockets and which wallets they can actually put to use, right? So an example I would say is that in the study we did with the smallholder farmers is, for example, Jollibee group saying that, they need to secure the supply chain. There was also a possibility to uplift their smallholder farmers in the supply chain. So you had a mix of both corporate OPEX that's going in, as well as the foundation money to support that whole chain and solutions that they can invest in. So it's really a question of, yes, there is. It's just a question of how do you deploy and the trust needed to do so. At the Temasek Trust itself, we also see this in our livability challenge. These are startup prizes and challenges that we run. It started in Singapore, but now expanding across the region. We see thousands of startups, and you also see family offices coming up to invest alongside us. So great on that. However, it's still small and still, much needed to be done. That's why we also created Coaxes, which is sort of a catalytic marketplace to try and match funders and investment opportunities, and also linking to Eliza's point, also using technology to crowdsource, right? So linking to other wealth platforms to bring capital to impact organizations, because too much money is actually spent, time actually spent actually fundraising as well. In terms of gaps, yes, nothing, policy is largely supportive. There are still some, friction points. especially when it comes to definition of how you want to deploy philanthropic capital, right? It doesn't need to be in country, but then, climate doesn't really respect borders, right? So how do you also, come and address those particular regulatory challenges? But movement is happening, so that's helpful, right?
Great. Well, thank you, Dawn. Michael, would love to hear from you. You yourself mentioned that perhaps sustainable and impact investing is not the first thing that's coming to mind for many wealth holders in Asia, and the operating business remains a key priority for many families. What, in your view, needs to happen? What kind of infrastructure needs to be built in order to lay the groundwork for more of a culture of impact investing, particularly for family offices in Asia?
Thanks, Ben. If I may, I want to respond to Dawn's first. Something Dawn mentioned about, Eliza and Dawn mentioned about the collaborative nature of impact investing. I think a tool that has been underutilized or maybe improperly used, but has great potential is really high risk and high impact blended finance vehicles. I think in my experience as an investor at a district, using blended finance to attract capital and amplified impact has been so well received by both my own family office, but other family offices and foundations which have joined. But I think the caveat is that they have to have a chance to understand and warm up to the idea. I think that these initial opportunities, to dip their toes in and build these positive experiences is really the challenge. For example, tax regulation in my city, functionally prohibits registered charitable foundations from participating in these blended finance structures. I think this is where legislation and regulators can follow innovators such as Singapore, such as Japan, to facilitate the creation of these cross-sector collaborations. I think going back to your question about it very briefly, a lot of our members at Tonic who are deeply in their business as a family business, as business families, they think about impact primarily. They're very much informed by what they see at the operating business. So actually, using that context to say, creating that regional impact, throughout their supply chain, throughout their vertical. I think it's a really good way of introducing that mentality, that thinking, into their practice across different forms of capital that is within their reach. And I think that's where I want to leave it at, but I'm glad to go into more later.
Yeah, no, well, and we'll come back to that, to Michael, for sure. I mean, one of the questions we've had, I think, from the audience is, what are some of the tools that enable that transition from being interested to then moving to action? So hearing a little bit of what you've seen there would be great as we come back to that during the Q&A. But yeah, Valerie, a similar question for you. I mean, what are some of the market infrastructure and policy related developments you've seen that UBS is most enthusiastic about, and where do you see the need for additional market building in Asia?
Yeah, thanks very much, Ben, and actually also wanted to echo what Michael mentioned, right, about the impact of the operating business as the key lens that we're actually seeing wealth owners in the region approach sustainable and impact investing. I think the market and policy infrastructure that has been quite supportive of this, I think, is work that policymakers, I think, in Singapore, we also see these in Hong Kong, that are actually driving a deeper understanding of transition finance. That's a topic that has arisen, not just focused, I think, on the green finance, but on what is transition finance, what is the participation there, how to make it, something that is appropriate for the region and the economies in Asia. I think in terms of that policy making, I think we're quite, we recognize that that's a great first step. But a number of those initiatives, I mean, talking about additional market building, probably need to get to conversations beyond just what the financial institutions are doing, to helping, I think, the real economy to, find the incentives to work on this. I think a lot of the policy developments focused around disclosure, for example. So we're keen, I think, to see how the real economy can also be incentivized, I think, to do this. I think the second thing that we're also seeing is really, product quality and availability for Asia-specific commercial impact opportunities remain relatively thin. This is an area I think that UBS sees as a priority. And I think on the wealth management side, there were a launch of Asia-tilted sustainable investing portfolios. And we continue to see opportunities for this to gain traction if the market depth does improve. So these are a lot of public market solutions, but I think the private market solutions are also the space that we would look to do a lot more in. I think on a positive note, we really see a lot of interest both on the philanthropic side from the government. I think they're also thinking very hard about how do they create the investor pool among philanthropists plus also impact investors on how should they participate. And I think they're putting sort of organizations together to do that. That's been driven at the Singapore government level that I think is quite encouraging. The second thing that I think was appreciated is the rise in the number of organizations that support impact investing. And I will mention Blue Mark and the work that you're very familiar with that is helping, I think, to create the what we call probably the scaffolding or the infrastructure to support measurement and management practices. So lastly, I think what probably gives some encouragement is that we're seeing that Asia Pacific still has an appeal as an investment destination, particularly I think on when you look at some of the data from Morningstar or from other institutions that are collecting this. So as an investment destination, there is interest to do this. So we're hopeful that the investors will continue to drive this and create more impact around this.
Great. Well, thank you, Valerie. And then, Katsuji, we look at Japan and see some very promising developments, and we'd welcome any insights you might share into what kinds of partnerships or policies have been particularly beneficial in Japan. But of course, there are challenges too. And so just hearing a little bit from you about where you want to make sure you don't lose sight of the kind of priorities that are needed in Japan, would welcome your sense of the challenges that remain.
Sure. Yeah, I spoke about the development in the maybe in the last 10 years in like 1 minute, but I think today we are standing here in 2025 looking at the new horizon for the impact economy, I think in Japan and elsewhere. And then one thing that is noticeable in Japan is that I think it was mentioned in the announcement of this webinar too, but the GPIF, the government pension investment fund in Japan, really had a step forward for this impact theme. Let me just read my rough translation of the subcommittee's minutes. I think with regard to impact, the GPIF has consideration non-financial factors in its investment, including impact, with a view to improving medium and long-term investment returns under the following approach, does not constitute irrelevant considerations in the same manner as considering ESG factors. So it's a mouthful, but as you can see, it's really a very, very careful approach to this issue of impact, which of course for good reasons, because their first priority is really to protect the savings, the retirement savings of the people. So, in order not to compromise but at the same time, how to really incorporate impact is really becoming a huge issue. And then for us, and for those of us in the impact, working on impact, this is really could be like a good milestone for us to move forward, because that's a very influential body, of course, because of the size of the asset that it has. Other challenges I think I see in Japan in terms of impact on consortium itself, but maybe larger than that, is really maybe two things I would like to mention. One is really the involvement of foundations and the philanthropic sectors, and also NGOs and nonprofit organizations, social sector organizations in the mix, because these are the people who have very good working knowledge about how to really put the notion of leave no one behind into practice. But they have not really been heavily involved in this movement as of yet. The second is, of course, although I have been talking about Japan, but it's very hard to, not really hard, but it's not easy to find cross sections of conversation points between ourselves and then folks in the panel, or like in Asia and Africa. I think we do need to do more outreach and then the communication with colleagues in Asia and Africa to really see how this can be deployed globally rather than just domestically in Japan. So yeah, I think those are the two challenges I think I see these days.
Well, thank you, Katsuji. Eliza, I'd love to ask you a question, and it's inspired by some of what we've been seeing coming in the Q&A. And please, if you're watching and have questions, please do feel free to use the Q&A function to send those to us. But Eliza, one question is how folks have moved from idea to action, and I think that question's primarily oriented toward families and individuals. But I'm curious how Temasek moved from this is a very conservative institutional investor, as it should be, a fiduciary, and yet Temasek has embraced impact investing. What has been that process of evolution at Temasek, and perhaps what could individuals learn from that, given you've got a fairly, again, probably conservative outlook? How has Temasek become comfortable with impact investing as a strategy?
Yeah, no, thanks for the question. I think what really helps is leadership. Given who we are, the size of who we are, without seniors' leadership vision on what they're trying to do, right? We're really trying to solve problems collectively so that there is a planet for our future generation. So it's a question of survival. With that in mind, I think it kind of flows through the whole organization to be open, nimble, and bold to try different innovations and kind of structures, etc. I think that's really key to move large institutions or organizations, right? Like kind of top-down leadership. Two, I think when we first started our journey, we didn't want to reinvent the wheel. Impact investing has been around for a long time, right? 15, 20 years. And that's why our philosophy is to really work with partners. How do we, amplify the work that's been doing, but kind of tapping on our advantage and network, given who we are in Asia and globally, right? So to manage in terms of the risk, it is risky, but to achieve the returns and impact we want, we then identify key partners that we can work with, who's very aligned with our impact thesis on the underserved. Right. And I think we mentioned on collaboration. I think even today, I'm inspired by, the conversations. There is so much we can do, right? Whether between governments, between different institutions, whether the philanthropists on our side, to really collaborate, put our heads together, find the right solutions to really address the problems. And I'll say start now. There is no perfect solution. we're all learning along the way, but I think it's the power of collaboration will make it work.
Thank you, Eliza. Michael, another question we have relates to this idea that there may be one individual inside an organization with an interest in impact. How do you diffuse that interest to more either members of the family or members of the investment team? How do we, amplify? So if you can share a little bit more about that, because I know that I'm sure that's something many families are experiencing.
Welcome to the story of my life. I think, for district, we were fortunate that it was obvious that the professionals in the family office were hesitant to unable to incorporate a lot of these impact investment skills and mindsets into the family office practice. And so, going back to what Eliza said, having clear leadership and saying, okay, we need to learn this new capability. How do we do it within our context? And of course, every family is different. The way that my family decided to do it was create a carve-out that, have new structures, new IC in order so, these new skills could get developed in the sandbox setting. Every family would approach innovation differently. So I think that's something, as working with advisors, working, with different ways of looking at how these innovations happen. But it's definitely not a prescription to for other people, but that's what worked for my family.
Got it. Thank you, Michael. Valerie, there are probably people on the call who are newer to impact investing and curious what kinds of product opportunities are there in the market. What are the kinds of products that families like Michael's and others are investing in? Where is their interest? What sort of products are Asian investors asking from, for example, UBS?
Yeah, thanks for that, Ben. I think we take it from a very much sort of like a investment portfolio approach, right? Where we sort of seek to understand what our customers are interested in terms of their investment return horizon, in terms of their risk appetite, and then sort of what are some of the thematics that they may be interested in. So I think we come to it approaching it from that perspective and not sort of just driving one particular sleeve. But I think what resonates with our clients that we've heard about is, I think they're keen on understanding, what a sustainable and impact investing solutions would look like. Quite often, I think they're coming to it maybe from a thematic perspective. We find that actually the thematics tend to resonate because I think they find it easy to identify, what that means. Perhaps it's something to do with healthcare. I think we've had that as a very common expression of interest. I think on the climate innovation side, we've also found that people are very interested to listen to more solutions around, I think, clean tech, sort of some of the longer term themes around water security, for example. So we, would be able to support them, I think, in terms of discretionary solutions, discretionary mandates from investment funds. And then also, I think, on the direct and the private equity side of things. On the philanthropic side, which I think was brought up, I think we're also seeing interest in blended finance type of instruments around, say, social themes. I think that's actually generated quite a bit of interest. And I think fundamentally, to sort of bridge to that, we find that I think our investors are very interested in understanding what others are doing. I think what Michael mentioned, right? I think the usefulness of institutions like Tonic plus coming to UBS to just learn what others are doing, what benchmarking themselves against peers, I think is also something they've found very helpful. And then I think being in a community to sort of collectively develop solutions has been something that, we've also explored whether there would be kind of interest to do that. And hearing around the room, it looks like we need to probably be a little bit more collaborative around that as well. I see Michael nodding, so that's assuring for us to hear that. But broadly, I think client education, peer benchmarking, looking for common themes. I think these are all things that we're hearing from our investors.
Got it. Thanks, Valerie. We have had a question come in related to an example of a successful impact investing transaction that you may have had visibility into. I mean, I'm curious if there are any examples you can share. Perhaps, blended finance has come up a lot. It may be helpful to share an example of a blended finance type investment if one comes to mind, but then also just an investment that you've been happy with that has delivered the kind of returns, financial and impact that you have wanted to see. If there are any examples that I'll open that question up to whomever wants to take it, but would welcome any insights to help make this real for some of those who are on the line. Who wants to take that?
I think perhaps I can take a shot at that. I think we at District we do 3 years a 3-year review periodically, and something that I was surprised by how well received it was a blended finance vehicle. Tackling the energy transition in sub-Saharan Africa. And this is the furthest thing that I thought my family office would be interested in. It's so hard to understand. It's so innovative. But what they saw, what they responded to was, co-investing with large development banks, very well-known foundations, and that the risk adjusted return was quite solid in terms of having kind of first loss guaranteed by some of these large banks and foundations. So that was something that was quite for me was like I didn't realize that they would have such a different lens on what success looks like. And for me, it became part of my mandate to look for more of these.
Eliza, can you share perhaps an investment that Temasek has made?
Yeah, so maybe to highlight, I think we've probably seen the most opportunities in financial services. We invested in a company called Savagram in India. It's still early days, but they focus on rural households. They provide productive and lending solutions. So it's a 360 lens, which helps them to improve their income and livelihood. There are a lot of examples, and if you take a look at India recently, large, sizable exits, whether at the IPO market or strategics. So there are really kind of tangible exits that we've seen in India over the past few years. Here are some examples, and from an investor perspective, you can also de-risk by working and investing into funds. I think Valerie mentioned that, right? So there are private equity funds that you can invest. We're seeing more consortiums of high net worth individuals and family offices, right? So an advisor helps you do the due diligence because they may not have the bandwidth or knowledge to manage that. So we're seeing a number of the family offices and philanthropies also coming to leading impact funds. So I think we're very excited. I think there are different opportunities across different sectors, whether on healthcare, climate, etc. Yeah.
Got it. And then a final question before we move to a final lightning round where I'll ask you all the same question. But Dawn and Katsuji, one of the questions we have is that it can be really hard to access impact investments. Like, where do you find them? How do you get access to them? And Dawn and Katsuji, you both mentioned that part of what SIP is doing is playing a matching function in the case of SIP, Dawn, and then Katsuji, that one of the working groups within the consortium is literally trying to solve that problem as well of matching investors and investment opportunities. So Dawn, can you comment on that question? How do we make this easier for people to be part of?
Well, definitely to be easier. Yes, they're good to see, more impact funds being launched. So, Temasek Trust does seed ABC Impact alongside Temasek. But also on the co-access platform, we're encouraging everyone to list their projects, right? Impact projects. And this is another way to find interested parties, find organizations, and just be more well-known, right? So, and really to get access to those, it's just as easy as an email. So we're trying to make it as low cost as possible for people to connect.
Right.
Same thing for Livability Challenge and also for Amplifier. So we're trying to do our best there.
Okay, well, we'll definitely share information about how to get access to those resources either through the chat or after our call. Katsuji, what about for the consortium? It sounds like that is a priority for the group.
Yeah, not just for the consortium, but maybe the one word I can mention is engagement. When I was with the GSG's Impact IPO working group, there are many startups, impact startups, and also other companies that are really focusing on impact these days. But they are finding a very hard time identifying investors that are aligned with their impact interests. So, from the investor's point of view, of course, the textbook is that from the GIIN is, of course, you have to start with your intention. With your intention, look for a good partner to reinvest, and then I think there are many out there. And then really, the key is to do a constant and wide range in engagement.
Right. Well, thank you, Katsuji. Well, we will need to wrap in the next few minutes. Thank you again so much to our panelists. I have a question for all of you, and we'll go through Eliza, Dawn, Michael, Valerie, and Katsuji. But the question is, what's the one thing that those of us who are outside the region can do to help grow the impact investment market in Asia? Eliza?
So I'll start. As I said, I think active participation and collaboration, the best way to learn about the market is to get involved, so to invest, to make a difference. I mean, your expertise outside of Asia, whether it's on deals, exit, ecosystem building, will be very valuable in shaping the impact in Asia.
Right. Thank you, Eliza. Dawn?
Just lean in, connect and collaborate. There are many companies that are already existing outside Asia that would be great fit in this part of the world, right? So they just need to be brought here. So please connect and lean in and get started.
Michael, thanks, Dawn. Michael?
Broken record here, but show up and roll up your sleeves. Yeah.
Thank you, Michael. Valerie?
From outside of the region, I think is to bring examples of why impact investing works and why does it work for families and businesses around the region.
That's great, Valerie. And Michael, to your credit too, I want to make sure people understand you're playing that role globally now for Tonic. So it's we know how great Tonic is at sharing those examples. So that's a great point, Valerie. And Katsuji?
Partnerships. I think there are many credible, and then very industrious partners you will be able to find if you're an investor, and then try to co-invest or trying to really forge some kind of partnership together.
Well, great. Thank you, Katsuji. And that does bring us to the end of today's Compass series. Thank you, Michael, Dawn, Eliza, Katsuji, Valerie, and thank you to our audience for joining us and for the great questions. Please visit tideline.com to access more of our Compass series discussions. A recording of this webinar will be available in a couple of weeks. And to my colleagues, Yael and Deegan, thank you for producing today's Compass series, and goodbye for now. Thanks again.